Folks, let's talk about how to profit from the hot housing market from the second half of 2020. Now, earlier last week, the Fed announced that they would hold interest rates near zero through 2020 to help the economy recover from the COVID-19 crisis. Now, this could potentially be a massive catalyst for the housing market. If you look at mortgage application volume, it's really increasing. Mortgage application survey for the week ending June 5th tells us that mortgage applications increased over 10% from a month earlier and 13% higher than a year ago. That's substantial. Now, according to the Mortgage Bankers Association, fueled again by low mortgage rates, pent-up demand from earlier in the spring, and states reopening across the country, purchase mortgage applications and refinances both increased. Matter of fact, the index rose to the highest level since January, as purchase activity increased for 8 straight weeks and was notably 13% higher than a year ago. These are facts, folks, and refinances moved higher for the first time in nearly 2 months, with both conventional and government applications rising, and the overall index coming in substantially higher than a year ago levels. And you might have guessed by now that when mortgage applications pick up, companies that generate mortgages tend to do well. Gee, what a concept. And that's why I want to talk today about PennyMac Financial Services, ticker symbol PFSI. Again, PFSI. The company conducts its business in 2 segments, mortgage banking investment and investment management. Now, the PennyMac is the largest originator in U.S. of residential-based loans. And what I like about PennyMac is the fact that the company has less default risk than some of its peers thanks to its government customers. The stock has been on a tear recently. 3-year return to investors, 131%. 3-year revenue growth, 185%. Get this, the stock has positive quarterly earnings, surpassing estimates for last 4 quarters and 3 positive quarters of earning surprises. The stock has 4 strong buy recommendations and a price target of $65 per share, making it an attractive buy at the current levels. Now, momentum has been increasing in this stock, and I'm expecting more upside over the next few quarters or possibly less. Now, the second stock on my list also benefits from increase in mortgage applications, but in a totally different way. When housing market picks up, usually the stocks that provide furnishings typically move higher too. What a concept. Again, I'm keeping it really basic, okay? Especially when you can buy these furnishings online. Remember, stay-at-home mandates and remote work-from-home environment is the new norm. And many Americans are spending 2 times as much time at home or even more right now. That means growth in sofa, coffee tables, other household furnishings is a no-brainer. Therefore, the stock that I want to bring to your attention is Wayfair, ticker symbol W. According to Wayfair, active customers are up almost 30% from a year ago. Repeat custom orders are up 70%, which is huge for this stock. The stock beat earning estimates by big digits in all 4 previous quarters and is showing a remarkable relative strength and leadership compared to other stocks in its sector. With COVID-19 causing havoc once again and no cure or vaccine on the horizon as of right now, I'm going to remain bullish on Wayfair since it's using this period to create a major name for itself in a relatively new industry. Imagine buying large furniture online. Who would have thought of that? That's thriving and will continue to thrive if things remain the same for a while longer, and I believe they will. Hope that helps. Folks, the government stimulus bill has created tons of market activity, and countless stocks could get ready to shoot through the roof. In fact, it's causing individual stocks to pop as much as 2,812% seemingly out of the blue. While very few investors know how to spot these trades, the system that I'm about to reveal has the power to spot them early, giving you the potential to execute them perfectly. Thanks to the biggest stimulus bill in U.S. history and the biggest opportunities are literally just around the corner. You could see returns of 464% from ACLS. How about 627% from HEES? How about 2,812% from NTHC? There's only one thing left to do. Click on the link below now to see how you could use this crisis to your advantage. Don't miss out.